Hello everyone. In my previous video, I will discuss about so many terms from this math, like field efficiency, interest rate, and so many things. Effective field capacity, theoretical field capacity, depreciation, and so many things. If you don't watch this video, please go to watch, and it will help you to do this math easily. Okay, so I read the math first. A farmer wishes to purchase a mini combine harvester for his farm. The width of the combine is 1.5 meter. Average speed of operation is 4 km per hour, and the field efficiency is 80%. The new cost of the machine is 18 lakh taka in Bangladesh. Annual interest rate is 9%. The machine is used 200 hours in a year. Diesel fuel consumption is 2.5 liter per hour. Calculate total cost of harvesting per hectare. Assume labor cost is taka 75 per hour. Okay, so here's given given that the uh, width of the combine, that is w is equal 1.5 meter, and the average speed of operation is 4 kilometer per hour, that is s is given 4 kilometer per hour, and field efficiency e is equal 80%. The new cost of the price of the machine, that is p is equal 18 lakh taka. Interest rate, that is I, is equal 9%. The machine is used 200 hours in a year, and diesel fuel consumption 2.5 liter per hour, and here's labor cost is taka 75 per hour. Okay, here's the given information that I said. Okay, but we have to assume there is the math don't give the price of diesel fuel, so we have to assume the price of diesel fuel is in Bangladesh it's 65 taka per liter. Okay, 65 taka per liter. So we have to calculate cost of harvesting per hectare, cost of harvesting per hectare. Okay, so we know that effective field capacity, EFC, is equal SW by 10 into EF by 100. So here is put the value, and we get 0.48 hectare per hour. Okay, obsolescence life of a combine is 10 years. Obsolescence life of a combine is 10 years. For this, we get average repair and maintenance cost per hour is 0.025% of the new cost from table. And yeah, the value is also we get from the book, The Principle of Farm Machinery. The writer is I will see you. That is the book, Principles of Farm Machinery, R.A. Kepner, Roy Bainer, and A.L. Barger. And here is the value. Here's the value. So we know that for obsolescence life of a combine is 10 years. Okay, so combine, here is the combine, self propelled combine, obsolescence life is 10 years, and here is given repair cost percent of new cost. Okay, average per hour. So it is given for combined self propelled is 0.025 percentage, okay, of new cost. So here's the it is we get from the table, and the value is 0.025% of the new cost from table. Assume 10% trade in value or salvage value. Okay, assume it, assume the value. If you guys don't understand this, what is salvage value and obsolescence, then go and see my first video. Okay, then we go to calculate the fixed charges, fixed cost. First depreciation, we know that depreciation D is equal P minus S by L, and this is straight line method for calculating depreciation. P minus S by L. So here is given price P is given 18 lakh, and the salvage value is 10%, 10% of new price. So 10%, if we do that, then it's comes to like that, and the value we get 1,62,000 taka per year. Interest on investment. So interest on investment IOI is equal, we know that P plus S by 2 into I, where I is equal to interest rate, 9%, which is given in our math, 9%, and 0.09, and we easily calculate this, and 89,100 taka per year. Taxes, insurance and shelter is, we know that 2% of new cost. So 2% of new cost, if we do that, then we will get the value like that. Total fixed cost is then depreciation plus interest on investment, and tax, insurance and shelter. So if we add all the value, then we will get 2,87,100 taka per year. Okay, per year, taka per year, we get all the value taka per year, and taka per year. So we have to convert it taka per hour, and the math is given that there is uh, the math is given 200 hours. The machine is used 200 hours in a year, so we can divide it, it 200, and if you divide it 200, then we can get taka per hour. Okay, then we can get 1435.5 taka per hour. Okay, total fixed cost that we already got. Okay, then we calculate the variable cost. The variable cost is repair and maintenance cost, that is R&M, is equal 0.025% of new cost. Okay, new cost is 0.025 percentage. Okay, 0.025 percentage, that is we written in this portion. Repair and maintenance cost, it is a get from table, 0.025% of the new cost from table, repair and maintenance cost. So we just to do it. And fuel cost, we assume the price of fuel for 1 liter is 65 taka, and the diesel fuel consumption is given in the math for combine is 2.5 liter per hour. Every hour need 2.5 liter diesel. Okay, then we calculate fuel cost F is equal, we get 162.5 taka per hour. Then the lubricant oil cost, O is equal to 50% of fuel cost, then we get this value. And labor cost is given in the math, 75 taka per hour. Total variable cost, then we add all the value, then we get this. And total cost is equal fixed cost and plus variable cost. So fixed cost plus variable cost is 2147.375 taka per hour. So the total cost is taka per hour. So we they till to they said that calculate cost of harvesting per hectare. We have to calculate per hectare, so the total cost per hectare is the total cost divided by effective field capacity. Okay, EFC, effective field capacity. Then if we divided that, then we can get the value of total cost per hectare 4,473.69 taka per hectare. So this is our math. It's not so hard, it's easy. So if you understand, then it's so easy to calculate this. I think you understand properly. If you don't understand any point, then let me know. I will try to reply your problem where you actually don't understand. Okay, so tata, bye bye, khatam.